What's going on, brothers? In today's video, we're going to be talking about a very controversial subject, and that is retiring by your 30s. Is this actually doable? Is this something that you can actually do and put to use? Can you really retire by the time you're 30? Well, yes, you can. It involves a lot of calculations, something called the 4% rule, living below your means, and investing a lot. In today's video, we're going to be breaking down the steps and implementations you need to put into your own life to actually accomplish and be able to retire by the age of 30. Although this seems very undoable and a very hard task to accomplish, if you follow these steps that we're about to go through in this slideshow, you can easily retire by the time you are 30 by living by these principles. Furthermore, before we dive into this, make sure to smash the thumbs up button, subscribe to our YouTube channel, leave a comment down below. Are you trying to retire by 30, or what are your thoughts and opinions on this video? Furthermore, let's dive into this video right now, brothers. Now, step number one is you need to be frugal overall. So in order to accomplish this and retire by the age of 30, you need to lower your expenses, try to have a pretty solid income that you can invest, and you need to save a lot of your money. So then, as you know, brothers, you can invest that money into an asset vehicle. So again, step one, be frugal. Spend like no money. Seriously, you need to not try to spend as much money as possible. Now, I've seen other people talk about this, and the strategy is called FIRE, and the FIRE stands for Financial Independence, Retire Early. So by spending less money, you can save more money, and the more money that you are actually able to save, the more money that you can invest. And the less that you spend, the lower your cost of living will be, which will help you achieve retiring by 30 and getting anywhere from 8 to 10% return on your investments and being able to live by what is called the 4% rule, which we're going to be diving into later in this video. So make sure to stick around. Now, the lower cost of living equals lower cost freedom fund, which means it's the money you need to retire, right? You don't want to live below your means or above your means. You just want to be able to have, a steady investment that you can live off and live a comfortable life. That is exactly what this strategy is. So that's step number one, be frugal. Make sure to be able to save anywhere from 50 to 70% of your money, which dives me into step two, which is what I just said. You need to save 50 to 70% of your earned income. Now that is going to be very hard to do. You may have to room up with some buddies. You may have to cut some expenses. You may not be driving a new car, but this is actually doable. I mean, if depending on your income, you can actually save 50 to 70% of your money. You're just not going to be able to go out to the club. You're not going to be able to go watch movies. You might have to eat at home instead of going out to eat. These are all things that a lot of Americans go out and they do. They go and they have those experiences and they go and spend money. As we like to say, 76% of Americans live paycheck to paycheck and 56% of Americans don't have $500. So you need to try to save as much money as possible. Now, if you look at this chart right here, this is what you are trying to accomplish. You are trying to accomplish working only from age 20 to 30 and then being able not to work or to retire and learn off and live off your passive income from the rest of those years. Now, this all dives back into what I first said at the beginning of the video. This is actually called the 4% rule, and this states that you should withdraw 4% of your portfolio each year in retirement for a comfortable life. It was created using historical data on stock and bond returns over a 50-year period. So again, you need to spend like no money, and the calculation you're going to do is your annual expenses times 30, okay? And you need to save and invest as much money as possible. That is the only way you're going to be able to do this. You have to live frugally. You have to live below your means, and you have to earn your money, keep your money, and multiply your money. That is something we really talk about at Brotherhood Finance, as well as time being your best asset, which directly correlates to this video. Now, let's do an example of this, okay? So, if your expenses were, $20,000, you would need $60,000 because you are 30xing that number. If your expenses are $35,000, you would need $1,050,000. If it was $50,000, it'd be $1.5 million. and so on. So for $100,000, let's say you have $100,000 of expenses. That's how much you're going to spend for your house, for your home, for your cars, for your insurance, everything that's going to be factored into your expenses. You would need to have $3 million to retire by 30. So something else to keep in mind based off those calculations. Again, it's times 30 your expenses, and then it's obviously, living below your means, being frugal, and then using the 4% rule, as the market historically is about 8 to 10% return on investment. So if you pull out that 4%, you're not actually touching your capital investment that you put in, and it's able to compound over time. Now, something to keep in mind. Okay, why do I need to live frugally, Brendan? Well, if you look right here, an extra $100 a month in expenses actually equates to an additional $36,000 you're going to need to save to be able to utilize that 4% rule. So that is very important to keep in mind. Again, earn, keep, and multiply your money. Live below your means. Invest as much as possible. And number 3, step 3 is passive investing. So we've talked about this before. Typically what we've learned for these people that are using the FIRE strategy is they invest in index funds. Now, if you haven't checked out our last video, make sure to check it out on our channel down below. It is the 3.5 best index funds. But in this example, I'm going to be using the VOO index, which is a great one, or the Vanguard S&P 500 ETF, which again is the VOO. Now, if you look right here on the screen, it has a very low expense ratio of 0.03%, which is what you want, and you're going to be able to own 500 companies. If you look at this chart right here, you got Apple, Amazon, Alphabet, Microsoft, Facebook, and then a whole bunch of other multitude of companies that you're going to be owning. This is going to lower your risk, diversify you, and this is what's going to get you that on average 8 to 10% historically, which is what you want to shoot for. Now, let's say your take-at-home pay is $56,250 a year. So if you're going to do this, that would be about $1,406.25 a month you would need to live off of. And then that additional capital that you get from your earned income, you would need to save $39,375. And then obviously you need to save it, but as you know, they're printing a lot of money. You need to invest that money. Again, you need to earn, keep, and multiply your money. Very important. So with that equation, you would need about $506,250 to achieve financial freedom. So that would be historically, as I said, 8 to 10%. That would be $39,375 at 8% return on investment over a length of 10 years. So it is very doable. It is going to be difficult to do. However, if you follow these steps and implementations, maybe you don't want to retire by 30. Maybe you don't want to retire by 40. Well, guess what? The compound effect, that's going to equate to a larger sum of capital, which is going to allow you to live more above your means or at where you want to live the longer time you get invested. That's why Warren Buffett always likes to say, time in the market beats timing the market. You can never know when the market's bottomed. The market will always bounce back, and it's very important to keep those fundamentals and those principles in mind. Now, what is your return at $39,375 at 8% a year? Well, you would result in about $570,000 and $408.40. So just from that factor, just from 10 years alone, you could turn your initial investment of $39,375 times 10 years to $570,000, and that's how you could live off the FIRE method. Again, brothers, this is how you can really put these practices and implementations into use. If you found value in this video, make sure to smash the thumbs up button. And again, check out our index fund video. We just made a video on the top 3.5 best index funds. In these uncertain market conditions, it's always important to keep that frame of mind that while others are selling, you need to be buying to increase your return on investment, and look at the assets that you own as really how much you own of the company, not the percentage up or down, because you always know rule number 2, and that's the market will always bounce back. Again, if you found value in this, make sure to check our other YouTube videos. We're on TikTok, we're on Instagram as well. We have a multitude of things you can check out on our website at brotherhoodfinance.com. Furthermore, I appreciate you all as always. If you could do so, please make sure to smash that thumbs up button. I really appreciate all the support, and I appreciate you supporting the channel. That way we can get into the algorithm. Furthermore, much love. Have a good rest of your day, a good rest of your weekend. Peace, brothers.